Bitcoin reaches new heights. So everyone's asking, is this the top? Hey guys, it's Keith Allen. Man, what a week I've had. I can't believe it's not the weekend already and it's only Tuesday. Been a busy few days. Wife had surgery yesterday. That went well. Thank you very much for everybody who chimed in and gave well wishes. And so finally getting to take a peek at charts. Fortunately, Bitcoin has been doing good things for us. Now, yesterday we talked, of course, about macro moves happening this time of year. For anybody who missed that analysis, I encourage you to go back. I'll give you a quick preview, and I apologize, down and dirty today. I haven't really had a chance to really analyze a whole lot. So we're going to do this kind of live in the fire. But yesterday we talked about a chart. Let me go ahead and share them so that I can reference what I'm talking about. And while I do that, just a reminder, if you haven't done so yet, please do me a favor, smash all the buttons, especially the like and subscribe button. While you're at it, give us a share and invite some friends into the stream here. We appreciate that as well. Every bit helps us grow this channel. So let me find the chart that I wanted to share with you, and then I will actually go ahead and share the screen. Okay, so there it is. Let's get to this guy right here. This is something I started back early on when I had first started trading crypto. By the way, live comments are open, so glad to have anybody with us. Looks like Wakas already joining the stream. Hey guys, by the way, this is always open, right? So if you've got questions, if you've got insights, yesterday a couple of people chimed in and asked me to look at some charts that I just didn't have time to because we were headed to the hospital for surgery. So if you guys come back in today, I'll see if I can get some of that done today too. So we had talked about these December 17th or thereabouts. Most of the time it's happened on December 17th, which incidentally is today. But back in 2017, we had a macro trend reversal from the top. That was the 2017 top around just shy of 20K. That was a monumental moment for Bitcoin and Bitcoiners, no doubt about it. Then in 2018, we bottomed on the bear market, and we had that last flush, and then a 344% upside move in the run that followed. And we were interrupted by a black swan event on the COVID crash. But 2017, December 17, 2019, when we kicked off the next bull. 2020, same thing on December 17th, macro trend breakout from a consolidation range and on to the mid-cycle top. Things pulled back, and then we got another push to the all-time high in 2021, 2022, and then December 17th, 2021. Of course, here we are, another December 17th date. That was the breakdown. We'd already topped here, but the validator for me was the breakdown through this purple 200 day moving average, showing us a breakdown of the market, right? Last year, or excuse me, 2022, it wasn't on December 17th. So, give or take a couple of days, right? This week, just either way, has been monumental. In 2022, we had one last flush below the 21-day moving average before the trend reversal that kicked us off into this market here, right? So that was a kind of a flush off of the FTX crash in November of 2022. Things started to come to rally back a bit, and then we had, as you can see here, one last flush, and then the recovery. Boom, we bounced, and here we go. 2023, last year, we tested support. That was a flush, a test of support on the 21-day moving average, and the market rallied out. Now, just because we have pullbacks, and this is a good note for what's happening now, right? You can have a serious correction in a bull market. It happens in every bull market. 20%, 30%, 40%, 50%, 60% even, right? Maybe even more at times. So just be prepared for that. Know that is kind of baked into the game here. This was a 21% flush here. And it shook a lot of people out. Found support at the 100-day moving average, and boom, off we went to the races. So here we are on December 17th, once again. And it is too soon to know if today is the day. Maybe yesterday was the day that we broke the 0.618 fib. I think what's important here is this was also this level just about 36 hours ago was also the prior all-time high. Okay, so we tested this and broke out yesterday. So maybe yesterday proves to be the day this year. Maybe it's today where we've just made another all-time high. Right, we were here yesterday. Was yesterday's all-time high. We pushed above that even since I put this price discovery label in here, and now we have a new all-time high at 108,368, right? So let's go ahead and change this. 108,368 is our new all-time high, getting awfully close to that 110 level. And these every 5,000, every 10,000, these are, in my opinion, psychological levels where, things happen. But the path forward is what really matters. So whether this becomes the top, right? And the title of this thing was, we're at new heights. Is this the top? Because there are a fair amount of people out there thinking this is the top. There are a fair amount of shorts getting squeezed. And, those people think that there's going to be a big flush. Now, I do think that a big correction is coming at some point in time. I've been saying that for months and months and months. It hasn't materialized yet. Just because it hasn't happened yet doesn't mean it isn't going to happen at all. It's a matter of when, not a matter of if, in my opinion. And that is just an opinion. Yours may differ. That's fine. If that were to come from this level now with a new all-time high at 108,000, what would that look like? Well, it would look like this. And I would look to the key moving averages. And I think that this prior all-time high is an RS flip that may be the macro move here that we were discussing yesterday. A move to the 21-day moving average, that's only an 8% move, and that's not a big deal for me. Down to the 50-day moving average, also not a big deal for me. Now, that could hold because you can see we've had some history here since back in October that hasn't been really, how should I say? Well, it hasn't really been broken. We had one wick below it, but a quick recovery. So that could indeed be a test. If we went down to the 100-day moving average, that gets us into that 76K range, 77, 76, 77K range. This is interesting to me for a couple of reasons. Number one, a 30% move to me qualifies as a major correction. Number two, this would take us into a gap fill of the CME gap, which is currently in that 77,900 to 80.6K range. So that would suffice. That would get us down there. And it gets us also to this prior consolidation range. It was a brief one, but we've been looking for consolidation ranges here since November 5th when things really broke out. If we were to proceed further into the 200-day moving average, that puts us above the 2021 top. Also very interesting to me. I don't think anybody really wants to see this broken, except maybe bears and anybody building a short here. But for the most part, this is a major move here. Now, if things were to proceed further than that, and they could, a move down to the trend line has beautiful correlation, in my opinion, with where we double bottomed to kick off this move and the macro trend line that dates back to the FTX crash here. So I believe that this is the strongest foundational support level that we could possibly have. If we were to get a flush there, this would punish a lot of people. But imagine the opportunity here, knowing that Bitcoin is already above 100,000, at 108,000, knowing all of the things we know now about all of those other players coming in, the institutional game with obviously the ETFs, but also with many of them now getting very, very antsy, FOMOing into Bitcoin now that we've passed the $100,000 threshold, and talk about the U.S. and other large world superpowers talking about building a reserve currency on Bitcoin. Oh, looks like we got a few things here. Wakas agreed with your December thesis, sir. Supported another reason is 108K is also a fib extension target area 1.414. That's interesting, Wakas. I like the 618s, the 0.5. I like the golden pocket. And we can actually look at that here on another chart. Incidentally, the target I'm looking for here, at least in the near term, is this measured move from this cup and handle up to, which would be a 77% move to the upside, which gets us to around 122 and change, which also correlates with the lifetime channel. If we break back into that channel, we really got some price discovery opportunities ahead of us. If not, that channel remains the glass ceiling, in my opinion, of where price is likely to go. Let's take this to a weekly just so I can give you some perspective on that. All right. So this is here's the lifetime channel that I'm talking about. Okay. So we were just talking about fib levels, and the 0.618 fib, we just crossed the 0.618. This also may be our December 17th macro move. Could be the RS flip of the 1.618. So if this measured move plays out and we hit this 122.5K level, and it's a range, I mean, don't think it's going to go to the penny. If it does, hey, pat myself on the back. Congratulations. But this market does not move in precision. In fact, it often overshoots a lot of targets, a lot of technical targets to trick bots and weak hands into selling. Sometimes it squeezes shorts, sometimes it flushes longs. Whatever the case, we could certainly, my target's 122.5. It could certainly go to 125. It could certainly go to 128. Nothing stopping that. Until, obviously I think this, and depending on when we get there, right? So let's say it takes a few more days. We could have, this be the glass ceiling at 149. And then, of course, we get into the 2618, which is at 155 and change. So this would be another glass ceiling of resistance and maybe a little bit of a consolidation if we make it up that high. So where's the top, right? And when I look at this measured move, I don't call this necessarily the cycle top. This is the top off of this macro move. Maybe it does prove to be the cycle top. We'll have to wait and see. But maybe things progress further into the 2.618, potentially higher. This would be amazing, a little bit shocking to me, but I'm not going to rule anything out based on what we've seen in the order book and based on what we've seen in price action. It's really hard to rule a whole lot out. 55 move. Good to see you. What up? How late are you? I don't know. You're a few minutes late, but that's okay. This will be recorded. You can watch it on YouTube. You can watch it on X. You'll be able to come back. We're about 14 minutes into this thing whenever you joined at this point. You're expecting 99 to 95 pullback would be healthy. Sure. Pullbacks are healthy at this stage in the game, right? I always say that these straight lines are not sustainable. They're very scary to me. But a lot of them have just kept on pushing. So you just have to, in my opinion, trade what's in front of you, or you could get less left in the dust. So we got that. So this is, basically what I've been referring to in terms of fibs. This started with Wakas had some insight on the 1.414. Hey, I'm a big fan of fibs. I don't play every single level. I think there are some key ones, obviously on the lower side too. I like the 382, the 0.5, the 618, 786. are the main ones that I focus on. The 0.5 and the 0.618, the golden pocket for me is really the that's the golden one for me. No pun intended. Obviously, we've had some continuation of ETF flows, which have been good. Um, this is ETHs net positive for a couple of weeks now. Bitcoin also positive for a couple of weeks now. Yesterday, another big day, 637 million in ETF inflows. So all things are pointing to a very healthy market, in my opinion. And in terms of whether where and when we top from, or where and when this pullback comes from, I think there's a couple of things that we need to consider. Number one, let's all just zoom out and take a breath here, right? Let's zoom out to the weekly, um, and we'll look at those moving averages as well, because I think they carry a bit more weight even than the dailies do. But look at where we are in the cycle. Let me just get this out of the way. Look at where we are in the cycle, okay, relative to other halvings, okay? We're still very early in this halving. I think there's plenty of time and plenty of room for price to continue to appreciate. Now, maybe after Inauguration Day, a lot of this is, largely the Trump pump, right? Maybe after Inauguration Day, it becomes a sell the news event. We'll have to see. And I'm not going to speculate on that. I'm just going to let the charts tell me what to do, what's going on. In terms of downside targets, again, we had looked at the daily moving averages and looked at what a flush down to the trend line would be, which is basically a 50% move from here. If we were to go down further, this is where I get real concerned. I would think this is most likely the end of the line for this trend. If we were to flush below the trend line and close below the trend line, of course, the very last line of defense would be the 200-week moving average, which is a consolidation area that I've been interested in for many, many months. I always expected us to go back and test this. It never, ever happened. And again, rather than wait on it, I chose to trade what was in front of me, take advantage of this double bottom here. And of course, the rest is history. So there's that. I also in the prelude, I teased a bit of another data point that might give you some insight for that. I guess first let's head over to fire charts and see what the liquidity looks like. And we can see that we do have ask liquidity stacking here at the 110 million mark. And I do think that all these tens and fives, every $5,000 increment is really a psychological range here. And at the moment, we've got eyes on what's happening up to 120K. So, we've seen much larger walls than 77 million. 77 million is sizable, but it's not insurmountable. When you see a couple hundred million get taken out, as we did when we crossed that 70K level. And we saw this was, I think, 150 or so. When you see this stuff get taken out, that doesn't give me a whole lot of concern about taking this out. When the market's ready to do it, it will do so. And we do have bid support coming in now above 105K. And so even if we got the flush down to 95K, like 55 move was suggesting, that would be healthy to me. And if we zoom out, we can see, we had some ranges here. Did I take this out? Let's add this back in here for a second. All right, we've had some ranges here that I think were interesting, that we could potentially see visited again. If not in one of those deeper corrections, this is the last one that really got tested. Was coming down to this 91K level, 91.6, something like that. So, you have this 100K threshold here on the daily moving average with the 21-day moving average. That would be poetic, I guess. A flush to that and a retest. That's just not the deep correction that we've been waiting for, and we may not get it for quite some time. So keep that in mind. Elad asking a great question. Are these all EMAs? No, I actually like the simple moving average. The SMA is what I prefer to use. There are lots of different opinions on this. You use what you're comfortable with. I will just tell you that I've been using the SMA, and I do occasionally check it against the EMA. But for the way that I like to trade, I use the SMA. It serves me well. You do whatever you're comfortable with. But that's a great question. So in terms of what the liquidity is telling us at the moment, we'll go back to fire charts here, and you can see that we do have, there's a ladder of liquidity. It doesn't look like much here because it's offset by the brightness of the bigger concentrations of liquidity. But I can boost that a little bit. You can see our nearest, our heaviest concentration of support is down at that 95K level that 55 move was talking about. And so, yeah, that flush is very possible. And you could see that would form a double bottom here, which would be good to see, right? That would be very bullish. Healthy pullback, double bottom would be a bullish move, in my opinion. The other thing I want to share with you, something that we don't often share here on the stream, little piece of data out of the MI dashboard for material indicators. This is beta to alts, rolling beta, 14-day rolling beta to be alts to BTC for all pairs. And what we can see here is that we are currently back to a period of high beta. And this historically has shown us local bottom areas, local support areas. And it's a range. It's not an exact thing, right? We could chop around in this range for a little bit. We could go up a little bit. We could go down a little bit. But we got little toppy areas where things peaked briefly, local tops. We dipped, came back down, right? You see this blue? We dipped, found support, went back up. So we just came off of an area where it was locally toppy. We consolidated briefly. We got a flush, and then, flush down here, and then we're now back to a period of high beta and relatively decent support. So to answer the question, is this the top? I say it is not. I say there's more in store. That's my take on things. I, again, am looking for this measured move to play out on this cup and handle pattern, wherever that cup and handle pattern is. Where is it? I'm looking for this measured move to play out. And that is, again, up at about 122, mid 122s. Anywhere in this range, and depending on where we are when that happens, maybe we go a little bit higher because we have this trend line on the lifetime channel as kind of the measured move there. So we'll be watching that. Of course, Christmas tends to be an interesting day. Tomorrow, of course, we have another big Fed day, Fed rate cut decision coming out tomorrow. The market, I would say 95% of the market has a 25 basis point cut baked in. If there is any disappointment on that whatsoever, right? If for some reason Fed Chair Powell and the board, the FOMC the committee decides not to make that 25 basis point cut, you are going to see an epic flush. You're going to see maybe that will trigger the dump that we have been waiting for, that big correction that we've been waiting for. But I say they have a history of not wanting to surprise the market, and I don't think they're going to surprise the market tomorrow either. So we'll be watching for that as things move forward. And with that, unless there's any other questions, I think I'm going to wrap it here for the day, guys, and climb back into charts and see if I can maybe make some trades on alts, which I'm watching. Incidentally, we got kind of a fake out on alt season. It never really materialized the way that we were expecting. We expected to see. Now, mind you, some alts were soaring, no doubt about it. No question that alts were starting to soar. But the full alt season, in my opinion, and again, I'm not an alt specialist, it requires Bitcoin dominance to fall further than it did. So yes, we did get quite a pullback on Bitcoin dominance back to about 54%. And that did rotate some money into alts that flew triple digits, no doubt about that. But I was looking for more. I was looking to go sub 50%, on Bitcoin dominance to really see the full effect of alt season. Maybe we're on pause for that. As you can see, USDT dominance also kind of finding a local bottom here as well. So, and now it looks like that's a triple bottom. So those are things to watch as things develop. I'm going to leave you with a parting shot of what's happening here in the order book. Is more support coming into this level here at around 106K. Going to leave it right there, guys. If you are interested in any of the tools, I encourage you to go check them out at materialindicators.com. I've got links to all of it down in the description. Have a good one, guys. Bye.